You're sitting in a dealership parking lot. Hands on the steering wheel. The car smells new, clean, expensive. You glance at the window sticker again. $32,000. Not luxury, not flashy, just normal. And somehow, this sensible car costs more than your rent did just a few years ago. The salesperson said the words that made it feel okay. Don't worry about the price, it's only $640 a month. Only. You nod. You almost smile. But deep down, there's something else. A quiet dread. Because the math doesn't feel right. We've been trained to ask one question. Can I afford the monthly payment? But that question is a trap. Because qualifying for a loan is not the same as being able to afford the car. Banks don't care if you build wealth. They care if you make payments. And in 2026, that gap has never been wider. Median household income, $75,000. Average new car price, $48,000. Let that sink in. We are financing assets that cost nearly an entire year of income. And somehow, this has been normalized. This is what I call normalized misery, where financial stress is rebranded as adulting. Let's break the illusion. That $700 monthly payment, that's not the real cost. Here's what owning that normal car actually looks like. Car payment, $748. Insurance, $200. Gas, $125. Maintenance, $100. Total, $1,173 per month. And that's being conservative. Now zoom out. That's over $14,000 per year. For something that is losing value every single day. Let me show you how this plays out in real life. Meet the Martinez family. They're doing better than average. Household income, $95,000 per year. They buy a $47,000 SUV. Nothing extreme, just safe, reliable, family-friendly. Here's their monthly reality. Take-home pay, roughly $6,200. Mortgage, $2,200. Car-related costs, $1,200. Before groceries, before utilities, before life. They've already committed over 50% of their income. They're not reckless. They're just playing by the rules and still ending up underwater. Now here's the part no one tells you. That $748 monthly payment, it has a second price tag. If you invested $748 per month into a basic index fund for 30 years, you wouldn't have a car. You'd have $1.6 to $1.7 million. Let that hit you. Every time you see that car, you're not just seeing transportation. You're seeing a $1.6 million decision, quietly made, every single month. So how did this become normal? Simple. The system adapted. When cars got too expensive, they didn't lower prices. They stretched time. 5-year loans became 7, 7-year loans became 10. Lower monthly payments, higher total cost. And here's the kicker. The car loses 60% of its value in the first 5 years. So you're still paying for something that's already lost most of its worth. This isn't ownership. This is what I call financial imprisonment with a backup camera. There's a simple rule almost nobody follows anymore. Your total vehicle expenses should not exceed 20% of your gross income. Not just the payment. Everything. Payment, insurance, gas, maintenance. But most people, they're way past that. Because the system tells you, if you can afford the payment, you can afford the car. But the system is not designed for your freedom. Let's get uncomfortable for a second. Ask yourself this. If nobody could see your car, would you still want it? No neighbors, no coworkers, no Instagram, just you. Would you still choose it? Because for many people, the car isn't transportation. It's identity, status, validation. But here's the truth. A luxury car isn't a sign of wealth. It's often a monthly invoice for the appearance of wealth. There's a different way to play this game. It's called wealth immunity. It's the ability to see the $70,000 SUV and feel nothing. No pull, no pressure. because you understand what it costs, not just today, but in lost time, lost options, lost freedom. You're not depriving yourself. You're protecting your future. Here's something even more serious. Financial stress doesn't just affect your bank account. It affects your brain. Studies show it can reduce your cognitive performance by up to 13 IQ points. That's the difference between clarity and constant overwhelm, between making smart decisions and reacting under pressure. So that car is not just costing you money, it's costing you mental bandwidth. So what's the alternative? You do something radical. You don't play the game. You stop asking, what can I afford monthly? And start asking, what gives me the most freedom? Because winning isn't a new car, a lower monthly payment, or approval from others. Winning is margin, flexibility, peace of mind. It's waking up without financial pressure. It's having options. It's extending your freedom horizon. The number of days you could survive without a paycheck. And every lifestyle upgrade compresses that freedom. That new car smell fades in weeks, but the payment, that stays for years. So the next time you're sitting in that dealership lot and someone tells you, it's only $700 a month, pause, because it's not $700. It's time, it's freedom, it's $1.6 million quietly slipping away. Before you make your next financial decision, calculate your freedom horizon. How long could you survive without income? Then ask yourself, is this purchase expanding that number or shrinking it? And this week, commit to one simple move. Delay a purchase, lower a cost, or choose a car that serves your future, not your ego. Because real wealth isn't what you drive. It's what you don't have to worry about. Don't let a car decide your financial future. Choose freedom instead.